You usually feel an economic crisis long before you understand the math behind it. It starts with a family watching the evening news, calculating whether their monthly income can still stretch to the end of the week. That anxiety takes physical form at the local fuel pump. Commuters suddenly find themselves waiting in longer lines, staring at meters that charge them a fraction more for their ride to work than they did the week before. Because when diesel gets more expensive, moving goods gets more expensive. That transport premium is quietly absorbed into the vegetable stalls and local markets, inflating the price of daily essentials. The invisible cost even seeps into the soil. Farmers rely heavily on imported compounds, and as those materials become difficult to source, the base cost of growing the food itself climbs. When citizens see these prices climb, the natural reaction is to look inward, to blame local policies or domestic mismanagement for the shrinking budget. But the pressure system crushing that household budget isn't forming over the subcontinent. To find the source of the pressure, we have to look westward. Local inflation is simply the symptom. The underlying disease affecting the Indian wallet originates thousands of kilometers away. It begins with military friction. When the United States and Iran escalate diplomatic standoffs into active posturing, the entire region prepares for conflict. That posturing puts the physical infrastructure of global energy supplies directly in the crosshairs. One stray missile or targeted blockade can instantly shut down millions of barrels of daily output. This matters because India relies on foreign nations for roughly 85% of its crude oil requirements. It is a deeply import-dependent economy. This animated graph shows how global crude prices react to that dependency. The moment military conflict threatens the supply chain, the market operates on fear, pricing in the risk of scarcity, which causes the cost per barrel to spike violently. Finding backup suppliers isn't a viable quick fix. You cannot safely divert commercial oil tankers or secure new air freight routes through actively contested airspace. Ultimately, India's domestic energy security is entirely hostage to the diplomatic relations of foreign powers. This scale illustrates the petrodollar mechanism. Crude oil cannot be bought with local currency. It requires US dollars. When war makes oil expensive, India drains its national reserves, pouring vastly more rupees onto the scale to maintain import volumes. With multiple nations scrambling to buy expensive oil simultaneously, the global demand for the US dollar surges, causing foreign reserves to stockpile and the currency's value to harden. Math dictates an inverse reaction. As the dollar gains weight on the global stage, the purchasing power of the Indian rupee splinters and falls. A collapsing domestic currency acts as a flare for global investors. Fearing that their investments will lose value, foreign capital begins rapidly pulling out of the country. That capital flight registers immediately on the Bombay Stock Exchange. Corporate valuations drop, dragging public wealth down with them in real time. Seeking shelter from the financial storm, citizens withdraw cash to purchase physical, tangible assets like gold, further straining the liquidity of local banks. A physical conflict over oil in the Middle East has now directly translated into a financial assault on the rupee, eroding the net worth of an entire nation. A shockwave of this magnitude bypasses local authorities entirely. It requires immediate intervention and damage control from the highest levels of national leadership. The chaotic data floating across the stock tickers represents the exact same wealth evaporating from the middle-class families we saw earlier. This is the harsh reality of modern economics. In a thoroughly globalized network, no country has walls high enough to isolate its citizens from external shocks. Ignoring international disputes is a luxury of the past. Today, the failure of foreign statecraft acts as a direct, unavoidable tax on local citizens. We are left with a clear warning. True national security is no longer determined by who patrols the physical borders, but by a country's economic resilience in a